Good morning and welcome to the first webinar run by the Middle East Investment Summit team. Today's topic is venturing beyond traditional deals and accelerating the MENA startup ecosystem and global lockdown. I think most attendees will agree that navigating this surreal and uncertain time holds a question mark over where we should be investing and what the landscape looks like for the Middle East startup ecosystem moving forward. So this certainly makes for an interesting discussion today. Now we have all our panelists who have switched on their microphones and cameras. I'd like to pass you over now to our moderator for the session, Dr. Rushi Dana, who is a partner of the Dana Family Office. Rushi, take it away.
Thank you, Blake. Hi, everyone. I'm so excited to be here. We have a very good panel here. In the interest of time, let's just go straight to the panel. So our first panelist is a woman I deeply admire, Heather Henyon, founding general partner of Mindshift Capital. Heather, would you like to introduce yourself?
Sure. Thanks, Rushi, for the kind intro, and thanks everyone for joining us at such an early hour during Ramadan. I run Mindshift Capital, which is a venture fund investing in gender diverse teams based in MENA, but also globally. We target 4 sectors: food tech, fintech, health tech, and ed tech. And we're delighted to be here and look forward to the panel today.
Sure. So Heather, I understand Mindshift is investing in the new world sectors, ed tech, health tech, fintech, and food tech. Where do you see the greatest opportunity and disruption post-COVID?
Yeah, no, I think in all of those sectors. I mean, really, we started investing in those sectors because we saw more female founders in those spaces. We didn't know obviously that COVID was going to happen. So we're kind of in the good position of, I guess, benefiting from that. The changes that we expected, especially in sectors like ed tech, we thought that would take kind of 3 to 5 years to really disrupt and change in the way that we're now seeing overnight. So, the massive incumbents like the schools who have been super slow to innovate have been forced to innovate just out of necessity. So we're seeing now massive growth. One of the companies in the region that we've invested in is Little Thinking Minds, which is an ed tech company selling into the schools, but they actually just launched a consumer product just because they've had massive jumps in their customer engagement. So the schools now, are heavily reliant. It's an Arabic learning platform, selling into 300 schools across the region. So now that the parents especially are very engaged, just because we're stuck with the homeschooling and basically replacing the role of the teachers, there's a big opportunity for just real customer engagement, which is something that we thought we would have to work really hard and probably spend a lot of money to drive. So that's one example. And then obviously other sectors like fintech, food tech, we're seeing massive shifts now towards plant-based protein. Just the factory farming, all the issues, especially in the US with the manufacturing that's been happening there. And I don't know if people are following it, but something like 70,000 animals are being killed per day because they just can't farm them or, basically slaughter them to transfer them into food sources. So there's a big shift now happening where people are more worried about things like immunity, wellness, just these areas that have become top of mind due to the coronavirus.
Sure. So Heather, I forgot to ask, why are you targeting diverse team? And I've also championed a lot for having more women on board. What's your opinion about that?
Yeah, I mean, frankly, I started Wayne, which is the first women's angel investor group about 6 years ago. And we were focused on seed stage companies then. So on gender lens, where there needs to be at least one female founder who's also on the management team. And those companies, I think, are very different when there's a woman on board. So I actually think that they're probably more of the types of companies we're going to see in this new world where they're more capital efficient, they burn less cash, they're more focused on revenue and profitability. There won't be as much as kind of, a growth at any cost, I think. And that those are typically the kinds of businesses that we see women build. Women take a long-term view. They're often the ones who build their families, they build their communities, and they're good company builders. So they're really focused on sustainability. So that's part of why we're focused on companies where there are female founders, because we think that they're more likely to survive the long term, and they generate maybe not the 1000x, but frankly, not many companies do really generate 1000x. So that's kind of our portfolio view.
Sure, and I think in the Arab world, it's the women who are actually running the show, so that's a good place to be in. So since Mindshift is investing global, what are the opportunities outside of MENA that you see currently?
I mean, very similar to the kinds of opportunities I think we see here, but there's more R&D in markets like Sweden. We're looking at a food tech company right now in Singapore that we're doing diligence on. That's very interesting. I think, obviously markets like the US, we've invested in a company called NX Prenatal, which is a blood test for premature infant birth. So we invested because there's a big use case here in the region. So 50% of the babies born in the Gulf countries are premature. So it's the highest preterm birth rate in the world. So the founders are, highly scientific and medical. So they are focused on the US market. They have a partnership with Thermal Scientific for China, but they're interested in this region because of the big use case. And also the highest child mortality rate under age 5 is in this region. So due to premature birth. So that those are markets like Jordan and Tunisia have the highest child mortality rates because of that. So the companies that we're investing in, I say outside of the region, typically are more scientific, more rooted in strong research and development, which we know just is harder to come across in this region, but we think there's a strong use case for them to basically sell into the region and scale into the region, which is part of our value proposition.
Sure, that's good. It's good to hear about the healthcare investment. I'm a doctor and I understand healthcare pretty well, and I'm excited about the new things that are coming up in healthcare. In fact, we made a couple of investments for COVID-19 startups as well. Do you see like healthcare growing up after COVID-19?
Yeah, definitely. So I think even in this region, just some of the reports coming out, those have been the ones to benefit. But I think a different kind of healthcare, I mean, obviously more focused on like telemedicine, but even around immunity and wellness. So preventative healthcare, which I think has been severely neglected over the years across the world, not just here, but everywhere. Another company we invested in is actually a Turkish company called Vivu, and they create urinary sticks that allow you to track your own wellness data points. So including things like immunity as one of the 10 data points you can track yourself. So we think also just even home testing. So being able to understand more about your own body and also a more holistic approach. Part of what we were focused on was what we call the rise of the Zillennial, so the next generation consumer, who really is watching their grandparents, parents go through cancer battles, chemotherapy, and they're worried about longevity and just what they can do to prevent that from happening to them. So they're more interested in things like taking care of themselves, eating better, cleaner eating, which is part of the shift also we see towards veganism, plant-based proteins, alternative sources of food aside from food that makes us sick.
Yeah, that's very interesting to hear. In fact, I made an investment in a genetic and microbiome company, and they're all about
cool. I love that space.
Yeah, preventive medicine and precision medicine. That's I think the next big thing.
Yeah, so, I agree.
Yeah. So just wanted to inform the attendees that the question and answers would be answered at the end, but please keep the questions coming. So I'm getting some questions. That's good. So now let's move on to the MENA region, and there's so many developments happening in the MENA region. With recently we heard that Saudi is buying out a $500 million stake in Live Nation. It's a concerts company. So we have with us here Neil Fleming, who is the managing director of MENA Angel Investors UAE. Neil, would you like to introduce yourself?
Yeah, thanks, Richie. So I'm the managing director and founder of MENA Angel Investor. We're essentially a company that's self-funded. We invest in startup technology businesses focused on the Middle East. And similar to Heather's point she put forward, we're also quite invested in gender diversity. So that comes from the first business and main business I set up, which is a software and digital services business to industrial asset management, oil and gas, power plants. And that's nearly 50% female workforce. So we're pretty unique in the sector to have such a high amount of ladies working in the business at all different levels, from senior management through to engineers on the field.
Wow, that's amazing. So Neil, you talked about the oil and gas company that you have. What impact do you foresee with the low oil prices would have on the region, and also on the startup investments that will be coming out in the region?
Yeah, so it's not a pretty picture in oil and gas, Richie. We've seen oil downturns before. I've been through, this is my third one now, but this one is significant in the sense that it was a lot steeper, faster, and more harsh and brutal than anything we faced sort of 2015, 2016. So from literally walking in clients' offices and seeing people pick up the boxes and be shuttered out the door, to every major project having major implications and things being cut back. I know from leadership before, I talked to them a lot about cost cutting from the last oil price downturn, and they said they were late to the game in the Middle East. They thought that cost cutting was enacted quicker in sort of North Sea and Europe, and we were a bit slow to the game. But I think the opposite's happened here. I think here we've now gone very heavy into this, and significant checks and balances have been put in place. What I would say is that I believe the recovery will be quicker than most people think. There's serious disruption to supply, and I think that with the OPEC cuts as well, you'll see the price rebound. But again, major projects have been put away, a lot of people redundant. And as we know, the Middle East is heavily reliant on oil and gas revenue. So I do see a knock-on effect that this will have, along with everything else that's going on into investment and fundraising. I hope that things do recover, but the industry has been severely affected. But we are now starting to see a platform establishing on a price, and I do think it will only build from here. With us as a business, we're actually predominantly in the sort of plant optimization and performance space, and we also do 2 million barrels of remote integrity support before COVID. So we were managing 2 million barrels of oil production remotely through our cloud software. So with clients now wanting to kind of optimize their maintenance strategies, their optimization of the plant, they're also having to cut down on their people on the plant. They can't even have their own normal workforce because of the risk of infecting the facilities. This is kind of an area that kind of aligns with our business model. And I think when everybody puts their head up above the water, when all this cost cutting and the immediate effects, we're starting to now see more strategic operators move towards a different way of working. I mean, there is literally facilities operating via Zoom, and I can give you multiple examples of clients where they've got potentially the wrong people on the plant, but they can't get the right people to the plant. And they're using things like Zoom conferencing to even help them operate the facilities. These things have actually gone remarkably well, but we're facing significant challenges, and hopefully things will start to recover soon.
Sure, let's hope so. So Neil, how are you positioning your startup investments to survive the crisis, and how would you position them for growth or post-COVID?
So we're invested in a variety of startups in different sectors, but what the overriding thing is just to keep them alive if they're really impacted. And I think being more as resourceful as possible, getting the burn rate down, making sure that anything they can do that they can do themselves is done, and they just minimize any cost and any spend. That's the first thing. The other thing I've been trying to push the guys into is focus on what they're in control of right now, because everybody's trying to drive and win new business in a lot of areas, but people are not really receptive to that in most cases. They're worried about their jobs, they're staying at home, they don't know what's happening in their own lives, and trying to win new business deals, new contracts, it's a difficult ask right now. So things like developing your technology, developing your partnerships and agreements and your marketing materials, or anything that you're in control of. And that's what we've been doing in our business, is trying to develop our software systems. And I've had much more time to do that as a result of this situation. And things have come out the other end that wouldn't have done ordinarily. So just making sure that that's really important at the moment. The other thing is looking forward. I do believe that we are moving to a low-touch economy, but I don't think it's going to be as massive and unprecedented as everybody sort of suggests and highlights in the media. I think there will be an element of that. There will be a transition, but I think people will slowly go back to their normal way of working when this current situation normalizes a bit. We're used to working with sort of disasters in heavy industry. We see things go on fire and we think the world's going to end, but actually we do tend to learn, you know, after this, and things do return to a state of normal. You can look at terrorist incidents and 7/11 and all these sort of things. You saw major disruption, but you saw things quite quickly come back, and people got on planes again. People felt safe again. So I do think that in the longer term, and in the energy sector, there'll be a change and a transition towards more local transport. People won't be using public transport for a while. We're already seeing a massive uptake in demand in local transport if you look at some parts of the world. So, you know, there's a balancing effect that's going to happen, but making sure companies are just getting through this crisis and doing what they can and what they're in control of is the key thing that I'm trying to push and help as much as I can.
Sure, I think you said the right thing. It's important to get the basics right at this time and then scale when the time is right. That's
Yeah.
good to build up the facilities, the software and all. So Neil, I just wanted to understand one more thing. For a startup to keep afloat, would you suggest to cut down the operating costs? Would you suggest firing employees or having like an employee salary cut, or just holding on the business operations? What would be the best approach?
So it's a bit of a political question, but an interesting thing the other day, one of our startups were invested in, they've got a fleet of basically vehicles, and they take people on a prescription basis, vault lines, to work in Turkey. And the strategy that the founder employed there was that he didn't want to lay anybody off, and he wanted to instead take sort of 60% pay cut for his senior management and then everybody else proportionally through the business. He wanted to try and keep the workforce together and cut down. And what he talked about is that unfortunately it kind of made some of his top performers quite upset, or some other performers quite upset. And then now he's actually terminating these guys. So I think not one size fits all. It absolutely depends on your business. But the inherent point of a business is you will have some weak people, and you will have some people that are maybe not aligned with your vision or what you're trying to do next, or your work ethic, whatever it is. And my personal opinion is that you should always try and protect your strongest assets. If you can protect everybody, you should. But the reality of the situation at the moment is that you don't want to put the entire business at risk, and then everybody's going to lose. So for me, it's more focused on protecting my strongest assets, and everybody manages this in a different way. We actually haven't really let that many people go in our businesses. We had some contractors that were direct hire or through a third-party company, and that was something we had to release. But our staff, we've tried to keep. Again, it depends on the situation, the business, and the challenges that you're being faced with.
Sure. Yeah, it's a tough decision. You don't know, like to cut salaries or to let some people go. It does affect the morale of everybody in the company. So Neil, since you are dealing with angel investors, I would love to hear like what are angel investors thinking at the moment? Are they how's their risk appetite when it comes to startups at the moment? Are they investing or are they holding on?
A lot of the guys I know are keeping the money for their existing investments. So if they've got existing investments that they want to try and get over the line and get through the crisis, they're parking some of their funds for that. Some of the more aggressive guys I know are still looking for opportunities, and still really interested in picking up sort of good deals and stuff. But yeah, I mean, there is definitely a slowdown, and there is definitely a reluctance to jump into new things at the moment. It's a funny one. I was actually near to investing in a business that did sort of online teaching, and it was exactly the kind of thing that this market would want right now. But this actually stopped me investing in that business because I felt that this space was going to get heavily crowded now with the big players in the market. And there was a huge amount of investment and money coming into that area. So I decided to step back because I thought this wasn't a business now we could compete to grow in this market with the big players coming into the same space. So, but everybody has a different view on these things.
Sure, and it's good to see that the government is actually supporting such kind of new initiatives about online learning and even telehealth. So recently there was a news that the telecom regulators here, they allowed telehealth on each of the networks that are around here. So that's very rare to see in UAE, but it's good to see that the government is supporting. Yeah. So from angels, let's look at a fund now. We have with us Noor Sued, General Partner of Global Ventures UAE. Hi, Noor. Would you like to introduce yourself?
Hi, Roshi. Thank you. So I am one of the GPs at Global Ventures. It's a UAE-based venture capital firm. We look at Series A and B investing. We invest mainly across the Middle East and Africa. And yeah, that's a general overview. I'm happy to talk through kind of what we're looking at right now, or answer more specific questions.
Sure. So you recently raised a fund, right? So I would love to know more about the process, how it was, and how are the LPs reacting at the moment? Are you communicating a little bit extra to the LPs at the moment? How are things going on?
So yes, and yes. So we're over communicating with our LPs. I always find that in times of crises, it's more important to be transparent and communicate an increasing amount. I look back at the time of 2008. And that crisis. And at the time I was part of the management team of a public company. So it was our family business here had just IPO'd in April 2008. So we were in a position where our first reports came out in the middle of a crisis. And I feel like we just closed this fund 6 months ago, and now our first reporting is coming out in the middle of a crisis. So we try to draw on, what similarities and best practices from back then. And really it was about getting ahead of it. So what we've done on the LP side is every 2 weeks we send out to our LPs an analysis company by company on cash, operations, sales, and overall for each company on a RAG analysis, so red, amber, green, and then the 5 things that those companies are working on to overcome the crisis. And we started doing this right at the beginning of March. So it's been, where we're now 10 weeks in. We at the same time started a weekly seminar for our founders. Again, we're now in our 10th week. So really try to get ahead of it. And it's every Sunday evening, all of our founders on a Zoom call. And it started really just so we could support them and build that community around them. And then we started to get questions. And so some of them, for example, were, how do you do sales, to an earlier point made today. So we bring in a sales expert and an operations expert, and then how do you downsize? And so for a lot of these founders, it's the first time they're living through a crisis in a position of leadership. And so every week we bring in somebody who has that expertise on the legal side, on the operations side. And we've been doing this for 10 weeks now. How do you fundraise in a crisis? So really trying to address the founder concerns. And we've opened that up to our LPs to answer your question a little bit more. So they can also have that interaction with the founders and get comfort around, what are the founders doing? They're super supportive. So they're actually on the calls every week trying to say, okay, how can I help? What can we do? So it's been really, I think, important to be as transparent as possible and to really share learnings and share information.
Good. I think one of the most rare resources here in the MENA region is talent. So like when you deal with these founders and they're like making new changes to adjust to the crisis situation, they must be like trying to let people go, and that's really difficult for a startup to do because it's really hard to get talent. So how are founders tackling that? Are they providing a marginal cut on a salary today and providing like some extra options or just unpaid leaves? What do you see in your portfolio companies?
So it depends on the company. So some of our companies have, grown tremendously because of the crisis. We're investors in Mum's World, which is an e-commerce platform, and they've grown very, very quickly to the point that their biggest challenge has been keeping up with demand, right? And so they're able to absorb from some of our other founders. So we created a platform for that, so that there's a group chat amongst them. And if anybody needs to let someone go, it's, by the way, I have a great talent. Can he be utilized within the group? I mean, now we have 15 companies in the portfolio. The last one we did was a health tech company. And we did that, funny enough, pre-crisis was when we started diligence in January. We closed the investment 2 months ago. And we were very kind of fortunate in our timing. And we had Tencent come into the deal and AIC come into the deal. I mean, it's based in Nigeria. They were expanding into North Africa. And because of this kind of transaction, again, we're leaning more and more into health tech and those founders. And those are even harder to find because we haven't had kind of the success stories in the industry on the tech side. Historically, we've done a lot on healthcare in the region, but not on health tech. So that's kind of how we utilize the platform across all our companies to really leverage the talent across them all. And some are sharing, which I think is really interesting. So, maybe now you can't afford your CFO, but, he's happy to take on more work and keep his job. And so now we're creating more of a back office, if you will, for some of our founders.
Wow. That's really good to hear because healthcare is something that's very dear to me, being a doctor. And there was a company that I invested into that they totally pivoted towards the COVID products at the moment because nothing else was going on. And they just thought that this is a revenue stream that they can tap into. So that shows like how agile the team is. Yeah.
And I think that's important. So as the founders pivot, it's our job to support them. So some have really addressed COVID. We have a field workforce management company that built a first responder module, right, for COVID, for anybody working on the front line, which has been amazing. They've launched that now across the US. They've launched that everywhere. We have a cybersecurity company in the portfolio. Demand's gone way up. But I think looking forward for the next 3 to 5 years, we're seeing health tech really the same way fintech was the last 5 years. And the question everybody tried to answer in finance for the last 5 to 10 years was, how do you bank the unbanked without building banks? And I think for the next 5 to 10 years, it's how do you provide healthcare access and healthcare inclusion without building more hospitals? And the region specifically just sits at like 1.2 doctors per 1,000 people, whereas the US and Europe are at like 4 or 4.5 per 1,000. So we're about 4 times less number of doctors and hospital beds. And so if you really want to democratize access to healthcare for the middle and bottom part of the pyramid, you're gonna have to do it digitally so that it's sustainable for the businesses to do it and can reach more people. And like you, I mean, I'm not a doctor, but I started my career in biotech and pharma in Boston 20 years ago and did that for several years before, doing my MBA. And so for me, this is a space that for 20 years has had challenges. And how do you provide healthcare access for hundreds of millions of people in a way that makes sense? And just like fintech figured it out, I think health tech will figure it out over the next 5 years. So that's kind of like what we're excited about at this point. And I think it's just such a great time to be in this space right now.
Yeah, that's amazing. And I'm so proud of your investment in the African healthcare startup. I'm really excited.
So Helium Health, they're amazing. It's a Y Combinator founder who's moved back to the region. Sunil's also in the deal as a venture souk. So it's been just an incredible journey with the most amazing team, and they're trying to expand. And they've democratized even your healthcare information. So historically, if you go to a hospital, the hospital has all the records on the doctor you saw and what they said, but you don't. So what he did, because he wasn't building off legacy, and again, I think the region is in such a position to leapfrog. So he said, okay, the hospital can have that information, and that's fantastic, but the patient should also know. So when you leave the hospital, you have the record digitally, who's the doctor you saw, what they said, what they prescribed. Oh, and by the way, if you cannot afford the treatment or the medicine, you can apply for a microloan within the platform. And that way you can get better faster, not get sicker and be non-productive for longer. So he's really looked at like, what are the patient pain points across the system? And then when you go see doctors later, you have your entire medical history on your phone. You don't have to sit and explain your medical history. So because there's no legacy and because regulators are now so accepting and insurance companies are so happy to pay, given the new consumer adoption because of COVID, it's the silver lining, right? You can build things that make sense for the patient, not just for the hospital, and that makes sense for the entire, how do you go from sick patient to well patient? That whole journey is really important. So I think that's why we got super excited about Helium and are very, very keen to support him in his growth.
Sure. Just one last question. I noticed that you invest into revenue generating companies that are leaders in their space and are immensely scalable. So what do you see about the valuation trends? What's happening these days?
I think, part of our value proposition to our LPs, and most of our LPs are kind of not in the region, has always been that our valuations in the region are lower because we don't have as much venture money. And so we can arbitrage that as these companies grow. I think as global valuations have come down, we lose that value add as a GP. So people will say, no, but that was like back from like 2000 to 2010 till 2020. But now valuations around the world are coming back to something a little bit more kind of sensible. That said, I do think on the multiple expansion side, we'll see massive multiple expansion in health tech over the next 3 to 4 years. Again, similar to fintech, it's just as more and more capital flows in, there'll be, first it's the VCs like us and like Sunil and Heather and everybody and Tushar and everyone on this call. Then you also have like the medical device companies coming in and the insurance providers that are already trying to get into some of our health tech rounds. And so as you have an increasing amount of capital coming into the ecosystem, valuations will go up. So I think that health tech multiples will start expanding probably next year, the year after, which is why we're very active in the space right now, and we're trying to get ahead of that. And I think that, founders will benefit that are in that space. I think that valuations across the board are, will vary. So you have the post-COVID economy or the new world the new economies as Heather put them, and again, it's ed tech, agri-tech, and future of work, robotics, things that are very exciting. And those will have a big boom. And I think that the rest will be much more about, is this a sustainable business? I think in e-commerce in the region, it's like SARS in Asia, right? So that was like the big inflection point that everybody needed to kind of just get on board. And if you take a look at Alibaba before SARS, it was a very small company. Post SARS, it was a massive company. So that's been nice. But I think that generally, it's interesting to see where things go. And we are really eager to see more platforms across these industries. And ed tech specifically, content used to be the biggest bottleneck. Content is no longer scarce. Now it's a commodity. So we're excited about what are the platforms that get built on top of that, right? And as a mother of 3 boys that I'm trying to homeschool, I'm like, I wish I had a dashboard, right? Like I could just see in one place, what is everyone supposed to do? So I think that in ed tech, that becomes, who's going to build these platforms that everyone integrates into. In agri-tech, vertical farming is awesome, but I'm more curious, what's the software that these vertical farms are going to run off of? And where's the data capture on these farms? So those are the things that, to your question, what's massively scalable? Those softwares, those platforms. The last crisis gave us platforms called Airbnb and Uber. This crisis will give us platforms in these new verticals. I agree with everything Heather and Neil have said, and I'm excited to hear what Sunil and Tushar are thinking as well. But that's kind of where our headspace is right now.
Good. Very enlightening. Thank you so much, Noor. So let's hear from a corporate venture capital now. Crescent Group has been around for a while. CE Ventures is the corporate venture capital platform. So we have with us Tushar Singhvi, Director, CE Ventures from UAE. Tushar, why don't you introduce yourself?
Thank you, Richie. So Crescent Group is a 50-year-old group. We are into multiple operating businesses like upstream oil and gas, ports and logistics, power. CE Ventures is the corporate venture capital arm. We started investing about 5 years ago, institutionalized it 3 years ago. We've deployed just upwards of 100 million in the last couple of years, and We're looking to deploy another 50 this year. That'll probably run into next year. But we're focused on certain strategic domains which actually have synergies and applications within our operating businesses, like energy tech, like supply chain tech and industrial IoT for our ports and logistics business, but across horizontal enterprise SaaS companies which have applications across sectors. But we're broader and also opportunistically invest in niche consumer opportunities globally. So our mandate is global: the US, Southeast Asia, including India, and of course MENA as our home market. And look at businesses investing in international businesses and help them expand to the MENA region. That's the other kind of one of the pillars of our strategy. So we've invested pretty broadly, as I said, across the US, across MENA and Southeast Asia, a mix of consumer and B2B. Of course, I think every sector in this, every sector has been impacted. You look at the first order, the second order, and the third order impact. First order, of course, travel, hospitality, etc. Second order, even if when we look at our B2B companies, the ones which we're serving, the first order impacted companies are obviously to a degree lesser impacted. And then you have certain beneficiaries as of this, as Noor was talking about, in the health tech space, in the ed tech space, e-commerce, express logistics. So yeah, we have a pretty broad portfolio. Thankfully, I think 50% are in the green, 80% in the green amber zone, about 20% in the kind of negative watch list.
Sure. So I understand you have a sizable portfolio. So how are the startups coping up with the operating capital and keeping themselves afloat? Do you see any good tips? Do you have some tips to share with the people?
Sure. So across the board, as I said, there are varying degrees of impact, and thankfully, most of our companies were well capitalized. They just raised funds. I think 90% of our companies have more than 12 months of cash runway. So there were a few which were in the process of raising funds, which obviously has become challenging. And as insiders, we've supported with follow-on capital there. But across the board, each of our company, every portfolio company went through business continuity, cash preservation, cost optimization. I mean, there's so many terms being used right now, but essentially rebooting, looking at where you ought to focus, how do you optimize costs, how you do more with less. There was a lot of fat which had kind of and waste which had come into many companies with the whole exuberance of capital being pumped in, focus on top line growth at the expense of being a sustainable business. I think every company has to go and think hard and look hard and actually re-optimize their models to be more sustainable, which is what we've done across the board with our portfolio companies. And again, be in a position to reactivate and pursue that growth when things become more normal. I think another key change, as I see, as Noor was saying, valuations. There were unrealistic expectations in founders' minds about valuations. That has obviously settled down. We came into 2020, at least we were, a bit cautious about valuations. A correction was expected. I think this has just accelerated that. But I think it's a real opportunity for portfolio companies to come out of this leaner and stronger. The ones who do survive will really, be 10x better than they were pre the pandemic.
Sure. So I understand CE Ventures provides patient and resilient capital. So how is the VC outlook towards founding and funding new startups? Would your existing startups be funded first, or are you looking at late stage startups to fund?
No, so as a corporate VC, the strategic aspect was obviously a key driver for us deploying capital. I think now, that's even even more important as we go through our digital transformation journey across our various businesses. It's even more important. The imperative is even stronger now to be able to integrate technology and absorb digital into our businesses, and hence we need to work even closer and with the startups we're investing in. So I think that part of it makes our strategy and the whole focus towards investing in startups even more. We In terms of our outlook, we definitely continue to look at opportunities. Of course, we first looked at our existing portfolio, the companies that really needed support, and how we can best support them. It is much longer term capital. We have a long term horizon, and hence are looking at partnering with the companies, working with the companies, helping them help us in our own businesses, and obviously helping them grow in their individual journey. So I think, and just to give some examples, we're invested in a company called Fresh to Home, which is India's largest seafood and meat e-commerce company. They obviously have really benefited, as you would imagine. I mean, they're 70% up from pre-COVID levels. But what helped them was not just the demand, but the supply chain, and they go and procure directly from farmers, and they're vertically integrated into fish farming, etc. So they didn't have the supply chain constraints as some of their competitors would have. We helped them expand to the UAE about a year ago, and even out here, demand has gone through the roof. The numbers have gone through the roof. They've actually in the UAE, because they're not as vertically integrated, struggled with coping with that demand. But that's where we've kind of helped them sort some of those issues out. Similarly, we're invested in a lot of enterprise software companies in the US, in cybersecurity, in data analytics, there's an AI-powered edtech company that we're invested in. All of them have seen, they're obviously beneficiaries of all of this. Where I think the issue would be for B2B companies would be in growth. How do you now engage with your customers more effectively? Digitally, there are not going to be too many conferences. There are not going to be too many B2B kind of client meetings anymore. How do you effectively engage with them? And of course, grow at the pace that you had expected to before.
Sure. Thank you so much, Tushar. We have some questions. I'll get back to you in the end with the questions, but let's move on to Sunil at the moment. So Sunil is a partner at VentureSouk. Sunil, would you like to introduce yourself?
Sure. My name is Sunil Gokhale. I'm one of the founding partners at VentureSouk. We're a Dubai-based VC firm. Portfolio fairly global. Half our portfolio is in the US, and then the rest is really split between, of course, the MENA region, India, Africa, and Asia as well. Been around for about 4.5 years, and really, in the last, I'd say 18 months have become much more inward looking in terms of the region, and looking to invest more here as things start to mature in some of the sectors that we're excited about.
So Sunil, a couple of days back, a TechCrunch article mentioned that 70% of startups in India are will just run out of money in less than 3 months. So what's your opinion about that?
Yeah, I think it's interesting. Obviously, with the federal lockdown over the last 6 weeks, in India, it's been fairly challenging for the entire economy in India. I think with that said, 2018, 2019, so I guess shortly thereafter, that article would have been written, was probably the biggest boom in the Indian ecosystem, where essentially, Bangalore became the new San Francisco, and I probably was going before the restrictions once a month to Bangalore, dealing with existing portfolio companies, but looking at new companies. So, I think the Indian ecosystem, for many years, there were classic kind of emerging market worries about, how do you get your money out? What's the governance like? What's liquidity going to look like? I now, if anyone who spends a lot of time there realizes, when you're speaking to founders at that high level, IIT educated, or people, that have spent significant time in the Valley and come back, or other sort of tech ecosystems. They're really on par with San Francisco and other large markets. So we're still very, very bullish long term on India. I think obviously, like a lot of economies, and there'll be varying degrees depending on response to COVID and other things. But I think India's huge population, extremely amazing talent, the largest, youngest working population in the world, and extremely tech savvy. So I think in the long run, we're still quite bullish on India for sure.
Sure. So I understand you also manage venture investments for some families. I'm curious how the families and angel investors reacting at the moment. I understand they would not fit into the most sophisticated investor category. So like, do you see any new things happening there?
Yeah, it's surprising. Most of a lot of the families that we've been working with over the last 2 years, and really working with them to organically build venture portfolios. A lot of these portfolios are actually being, or programs or VC programs are being run by the next generation of members, sons and daughters within those large family groups, and a lot of them are here and in Saudi in particular, extremely sophisticated families. So their response to this has been just like their response to crises that may have emerged in their core businesses over the last 50 years. So actually, quite calm, cool, and collect, to be honest. And really, a lot of them have been wanting us to get more aggressive. And so we've, I think as Noor mentioned, communication has been key, and really not just from a crisis management standpoint, but also, where are the opportunities now where we can look to potentially make a bigger splash. And so it's actually been, not too bad across the board.
Good. And I understand with the common theme of lower valuations, there'll be harder questions from VCs and investors as well, especially related to the stability of a company's revenue stream, the way it's managing cash, and the clarity of its paths to profitability. So do you see those questions coming up by your investor groups?
Yeah, absolutely. And frankly, these are questions that everyone should have been asking for the last few years anyways, to be completely honest. But I think like everyone else, I think 2, 3, 4 years ago, you could probably get away with chasing growth a little bit, looking for the next round, and momentum would carry a lot of companies. And I think any VC in the world who says they didn't participate in that is definitely lying. And so I think right now it's focused, all of us as venture capitalists, to really hone in on core metrics and what really matters. I think Noor made a point about founders. A lot of them not having dealt with this type of environment. We've only seen upward trajectory for the last 10 years, particularly in VC. Well, that also applies to VCs as well. Starting a VC in the last 10 years, everyone's been riding this wave up. And so it's been a very sexy asset class, and everyone's really wanted to jump in. So I think it's both sides of the equation as well, as where, VCs have to look at how they do their job as well and what they invest in. And for us, particularly the last 18 months, we've been, really, really much more focused, obviously not predicting COVID and all of that stuff, but just, really been focused on software businesses. Myself, I'm spending most of my time on fintech. And so, looking for businesses with low overhead, low CapEx, easily scalable, healthy margins. And so I think everyone's starting to obviously zone in on that more. In terms of valuations, I think you are seeing it really at the early stages a little bit. It really depends on the region and the countries. But I think, category leaders are still raising large amounts of money at fairly high valuations. So, which is, if you're in those companies, is a great thing, of course. I'm not sure necessarily, the steep cut in valuations has really trickled out yet. I think we'll start to see it even more, in this quarter, next quarter, and for the rest of the year. But you're definitely seeing people, VCs, stop conversations and pass more quickly on things, and really kind of get centered and focused about what they want to do with their portfolio.
Sure. And I understand at the start of the pandemic, VentureSouk also launched Conscious Collective for mission-driven investors. And thanks for organizing Angel Rise. I was there last year. So how was the response so far? Like, what all other initiatives are you doing at the moment?
Yeah, so Conscious Collective is something we launched late last year, and really a program driven by my partner Sonia Waymuller, who most people know. But it's really a vehicle that's focused on making investments in companies that are having a social impact, as well as obviously. We look at the same commercial metrics that we would normally look at any particular deal, but also, really have developed a social impact measurement and metrics that we need to see in each of these companies in order to proceed with an investment. So it's still early days. We've made one investment so far, and looking to probably do between 7 and 10 for the rest of the year, early stage. Seed plus Series A, and then see if and hopefully develop this into a larger platform. And also in terms of newer initiatives, we're working on a large fintech initiative that'll we'll be looking to launch in the next couple of months. So we're kind of pushing ahead like everybody else.
Good, very good, Samir. So let's take some questions from the audience. We got one question on EdTech. So the EdTech platforms, what do they need to do to ensure sustainability and robustness going forward, particularly in a scenario where education may be a combination of face-to-face and online? So Heather, would you like to take that, or Noor?
I'm happy to kind of take a stab at it. And Heather, please feel free to contradict or agree. I think that when it comes to EdTech, that we're going to see a lot happening, and I do think it'll be a combination of online and offline in the future. I think that my personal feelings towards online learning varies about 16 times in one day. But I do think that there's a lot of benefits that could be derived. I think the sustainability really comes from the value add. I think that content has just become a commodity, and it's the way that you deliver that content and the way that you measure results. So what I'd like to see kind of is, can I tell on a very quantitative level how much my child has learned in a week or a month? And not just via testing. And kids are smart. They can figure out workarounds. They can Google things. They can ask Alexa to help them with answers. So they can do lots of different things to kind of hack the system. So I think it's really, delivering the learning. And then at the same time, I think it's about holistic, personalized learning. And if they can hone in on this child really cares or is driven by X, Y, and Z, how can we then filter the learning and really help them have their own journey through that learning and measure those results? So I think personalized learning and measuring is what education needs to deliver to be sustainable.
Maybe just to add quickly, I think that the challenge with the tools that we're using now, none of them were designed for a purely online model. So these were all supplemental tools that were designed for education to be delivered in that way. So as we move more into this sort of hybrid market, there will be more tools coming out. And one of the challenges, frankly, is a lot of them are B2B2C. So they have to really focus on engagement of the end user, which isn't actually always the student, depending on the age of the child, is the parent. So one thing I've seen a lot of ed techs, struggle with is how do they get access to the parents, because the schools obviously are kind of the clearinghouse. If you go straight consumer, then customer acquisition cost, those are super high and challenging. So require lots of capital to be able to reach those customers. So I think we'll see more leveling out, and then and I think really new tools that we haven't focused on. I think like the dashboard idea that Noor mentioned is great. I struggle with the same thing with my kids, and then also just making sure that kids figure out how to get around like all these kind of restrictions that we have around gaming. And I think the overflow into that is another challenge that for me, I was like 0 screen time, and now I've gone into this world of like limiting to 8 hours a day, which is just nuts, So it's really, I think parents and teachers also, I think the teachers are a massive customer they've been totally ignored in this process. And I think the more tools that they're given, and the more that some of these ed techs start to target them and make their lives easier. And also, I mean, with LTM, they target the Arabic teachers who are very limited tech users. So they're still doing things via WhatsApp. They're not sophisticated, kind of, just they're just not aware of how to go into deep tools using AI or whatever. So more of that market, I think, will be interesting, and we'll see more growth in over the next year.
Sure. So we have one more question on fintech. So fintech is increasing and gaining a lot of traction, both from users and investors. Which subsector of fintech do you see that's leading the chart in the Middle East? Sunil, do you want to take that?
Sure. Yeah. I guess in the Middle East, we've invested in a number of fintech companies globally. So think when we think about the Middle East, we try to look around to see what sectors have been interesting in different markets, and different pieces of them will be applicable to here depending on demographics and all sorts of other things. I think for us as a firm, we're quite interested in payment and kind of fintech infrastructure businesses, platforms that enable the development of other fintech companies, and also helps banks talk to software companies and have them synergize on different things. And so infrastructure is something we're interested in. Also platforms that focus on small and medium-sized businesses has always been an area that I've been interested in globally. It started in India, of course, where you've got a huge demographic of merchants, and how they deal with their customers, how they deal with their suppliers, whether it's credit, whether it's payments. We're investors in a company called Cut the Book, which just announced a fairly large round yesterday. And so looking for businesses like that in the region, to me seems like an area that's been ignored for the last few years. And so we're excited to look at that, and other things like enabling technology, businesses that enable banks and insurance companies and financial institutions to do their job better, and of course larger industries as well, whether it's digital verification or ID verification, KYC, businesses like that are as I mentioned before, fairly low capex, not a lot of costs associated with their very thick margins, and subscription-based models that are sticky.
Sure. We have one interesting question on micro-mobility. Will micro-mobility gain more traction post-COVID, since people would want to stay away from enclosed assets like metros and buses, like the electric scooters and all? Tushar, you want to take that? Yeah.
Yeah, sure. I mean, we are invested in a Turkish micro-mobility company called Marte, and obviously, with the lockdowns and restrictions, demand has come down, the numbers have come down, but I think it'll definitely be a preferred mode of transportation going forward. You would imagine people would want to avoid crowded buses or trains, and really use scooters, which are obviously scooters and other forms of micromobility, mopeds, etc., which you're there individually, and you're not kind of restricted in any way. So we do definitely had seen, of course, a trend, but this we believe it's going to actually accelerate it. And the fact that it obviously it decreases congestion, and there's so many other advantages for the municipalities in every city. So I think this just gives one more added advantage from a public health perspective.
Sure. One question for Neil. So Neil, people are asking, like, what should startups do, like in terms of like raising new funds, like new startups? Any tips for them?
I think communication, from what I've seen, is very important. So we've seen some startups not communicate very regularly and very well. We're not silly. We know they're having a difficult time, and we're here to help. So I think the more communication, the more transparent communication, and the closer they can get to their investors, and let them understand what's happening. Because most of the investors that I invest with, we're all businessmen. we've all been through similar sorts of issues in the past, not like this, but we've had hard times and good times, and we can add a lot of value. So I think that's the main thing. And just try and see this as something like in stages. So don't see this as something that's forever all the same. It isn't. We're in a bit of a crisis situation at the moment. We have to get through the stage one, and then we have to build from stage one into a new pivot and a new strategy. So it's just trying to make sure people don't panic, and keep talking and keep communicating. I thought the way Noor spoke about everybody helping and sharing ideas is very powerful, and it can be very lonely with a startup when you're leading a business like this, and it can be quite overpowering. So being able to talk and communicate as well, just from a mental health point of view, is very important.
Sure. So there's one last question. It's about medtech and robotics. So how are robotics and robotic surgery? Is it coming up at the moment, Tushar? I think you made an investment in that space.
Yes, so we are invested in fact, 2 robotic surgical companies in the US. These are kind of pre-FDA, or we're invested in them pre-FDA, and they're in the process of going through FDA. So we definitely see an opportunity, or there was always an opportunity. It's not so much impacted by COVID, or not, the opportunity remains, I think, but of course, the demand will enhance, and with the focus across medtech. We look at medtech, health tech, and biotech as 3 separate verticals, of course, and we think all 3 of them have an extremely promising outlook and future. So, we're kind of doubling down on our health tech, med tech, and biotech investments.
Good. Even I've made an investment in a robotic surgery company. In fact, I was writing an article recently on how robots could help in the COVID-19 situation. So there are also robots that can actually help intubate patients and take nasal swabs and all of that. And that could really help in situations like this. Okay, I think we've reached the end of the time, and let's just wrap up. Thank you so much for having us.
Thank you.
Thank you.
Thanks to all of our
Thank you. Thanks,
for
everyone.
that insightful session. Well, that is the end of our first webinar. Thank you all so much for joining. The webinar will be accessible via our website for on-demand viewing. If you do have any questions, please feel free to get in touch with us via our website. We will be soon announcing the topic, date, and time of our next webinar. So please keep an eye on your emails, on social media, and our website for updates. Thank you, and see you next time. Bye-bye.
Thank you.
Thank you.